Ahoy there, trader, and welcome back. This is the Anti-Investor Stocks and Options Trading Podcast. Trading is hard, but today let's make it easy. I'll be breaking down some of the stock market's hardest challenges, and today we're going to talk about recognizing when to step back and managing the trader within. So welcome to the Anti-Investor Stocks and Options Trading Podcast, where we talk about what really works and consistently wins at trading the financial markets. My goal is to give you the right tools, the correct rules, the software to assist you, a community to support you, and if you will allow me to be a mentor to show you the right way so that you get real results in the fastest and smartest possible way. So then, in trading, knowing when to step back, whether it's due to personal tilt, to swipe a phrase from the poker world, or is it unfavorable market conditions? It is an aspect of trading that I call managing the trader if it's the trader within. Anyway, this approach is, again, essential for, I'm saying this every week on this short series of things. I think it's fair to say that everything's interwoven. There's no single thing that is essential. They're all critical, combined together. They're all essential for maintaining long-term success, and more importantly, in this week's case, a healthy trading mindset, and just life mindset for that matter. So the importance of stepping back again. Previously, we've looked at three questions in the last several episodes. Is it me? Is it the markets? Or is it the strategy? Again, on the assumption that we have a proven profitable rule-based trading system, it's probably not the strategy. Well, again, assuming that you're following it and you have one. So is it me or is it the markets? And this is what we want to try and do. And if it is decided that it's you, then this is when you want to try and take a step back. So we're going to explore how to determine if it's you and whether we should be stepping back or not. Generally, if you're losing sleep, you've got sweaty palms, sleepless nights, and you're feeling tired and jaded, you're exhausted from the thought of trading, then you probably should take a break. And again, that's true with anything, again, not just trading. But what you want to do is prevent emotional trading decisions. Again, recently I've been speaking to several traders who are revenge trading. They're over-trading, they're over-analyzing, overthinking, and the reality is they're not following the process. Again, if trading was easy, we'd all be doing it. And in fairness, trading can be easy, but the hard part is doing it and not overthinking what you're doing. Again, the hard part from my perspective is being done. I've spent years learning my craft, designing several strategies, in fact, and the one that I'm favoring the most is my daily and now weekly SPX income system. And again, the hardest part is following it. Again, I've done the hard work, the strategy, the system, the rules that we ask before placing a trade take care of all the thinking process so that I can go through a pre-trade checklist, like a pilot goes through a pre-flight checklist. Is this on? Has that happened? Has this happened? Yes, 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 place the trade. And if it hits a no, has this condition been met? No, it's not. Then I stop there and wait for it to happen or restart the process when the next conditions are met. So we want to try and avoid over trading, and again, the rules help me with that. Again, because this was something that I suffered with early on. Again, my idea of short-term trading and day trading essentially was probably like most people's pew, sit there, and you trade like you're playing Nintendo and your quick fire trades, and that is a way of trading, but it's not my idea of a good day. I want to really just look for one good trade every day when I'm day trading, one good trade every week when I'm swing trading for a few days. That's essentially what I'm trying to do. So avoiding over trading, and again, if you have a bad run in trades, what we don't want to do is react to that bad trading. And a simple thing that we can all do is reduce your position size. Again, the best way of thinking about position size is it's like a volume dial on that little voice in your head that says, just go and put the trade on, just go and do this, just go and take this course of action. And if your position size is too big, that voice in your head, the compulsion to listen to it, more importantly, is going to be really high. It's going to be screaming at you, take action, do this, take that, move your stop loss, revenge trade. So if you reduce your position size, again, that little voice, it never goes away, but you will reduce it to the point where you can ignore it. Again, it'll still always be there. It never goes away. But you will be able to ignore that little voice that just says, just take this course of action, just deviate from your trading plan, just go and bugger around with all the hard work that you've done to get to this point. And it should help prevent those emotional trading decisions, or to be fair, reactions that are driven by frustration or desperation. Look at the market conditions, recognizing that when the market dynamics are not quite aligned with your strategy. Again, for example, one of the strategies that I use is trend trading, and I use moving averages as a lens to look at where price is in relation to a combination of 3 moving averages. Now, when the market is range bound, that's obviously not a great time for a trending strategy. Again, it's non-trending. So I can use the moving averages when they, for example, when the 20 and the 50 period moving average crossover once, twice, 3 times on the time frame that I'm looking at, then that is not a great environment for me. That is suggesting that we have, it's now a statement, if we have a mechanical assessment of a consolidation. Again, you can do this a million different ways. Multiple touch points of highs and lows, etc. But when you have 3 moving average crossovers, once, twice, again, arguably you could use 2 if you want to be a little bit more aggressive, but 1, 2, 3, I've definitely got to call the current market environment a consolidation. Just take a step back, draw horizontal lines above the highs and the lows to box in that area that is non-trending, and again, wait for a breakout or revert to range trading strategies. The time to trade the trend is not now, and it just lets me put that strategy temporarily to one side until I see one of my 6 money making patterns. Again, if you want to go back to the very first episode where I talk about the trend trading approach that I'm just dancing around at the moment, and the assessment for that consolidation allows me to open up the other 4 range trading opportunity gains: buy range lows, sell range highs, break of range highs, break of range lows. But buying dips and selling rallies, aka trading the trend, not there anymore. So just put it to one side. So just recognizing those market dynamics have changed for the strategy. So again, is it the strategy? Again, you want a assessment so that you can evaluate those conditions and try and make it as mechanical as possible. The thing that's or a third thing that might not be obvious to everyone is your personal health. Again, in my case, I've got Crohn's disease, so I'm very aware that my health has peaks and troughs quite regularly, perhaps more than most people, just because, again, of my personal ongoing health condition. So I want to make sure that trading's not taking a toll on my physical well-being as well as my mental well-being, both of which we've talked separately, or I've talked separately about on previous episodes. So just, again, if you're stressed, if you've got sweaty palms, if you can't stop thinking about the what-if scenario, maybe mentally you're just a little bit exhausted, you should take a step back. Physically, if you're sleeping, you're not well, maybe you've got coughs, colds, flu, maybe you've just literally caught a head cold, take a step back. You don't have to trade every day. Again, for example, yesterday, I went to, as I'm recording this yesterday, middle of March, I went to the zoo and we had a big cat day. We went and saw the jaguars, we saw the cheetahs, we saw the lions, and we saw, 2, they're almost a year old now, but basically 2 tiger cubs. We've been watching them grow up and get bigger and bigger over the last sort of 12 months. Again, going to and visiting a zoo is one of my favourite pastimes. So we just had a big cat day, and it just breaks the midweek up. It was a Thursday that I went, just for reference if you're listening to this in the future. And again, it just allows me to recharge my mental batteries, physical batteries, not just from a trading perspective, but just from a life point of view. Just go and enjoy doing something other than sitting at the computer watching the charts, because it's not healthy long term. It's not my idea of a pleasant way to spend time. Sit in front of the charts, that is. So when to step away during periods of consistent losses, when your strategies aren't performing as expected. Again, you want to be asking the questions anyway. Is it me? Is it the markets? Is it the strategy? And maybe your personal circumstances are currently affecting your decision-making process, your emotional state of mind. You could be in the middle of changing careers, moving house. You might be having a family event where you could be, bringing another child into the world. There's lots of positive reasons why you might want to take a break as well, because hey, there's sometimes just more important things than getting the next trade on. During times of extreme market volatility that might not be suiting your trading style might also be something that you need to consider for your individual strategy. Again, the way that I trade is built into the rule set that I use already. So again, I don't have to think about that on a day-to-day basis. It's just part of the checklist. Has this thing happened? Yes or no? And move on with the rest of the decision-making algorithm. Other considerations that you might want to look at are, again, just take regular breaks anyway, just to prevent burnouts. Again, the way that I trade is very minimal from a time point of view, but it still can be easy to fall into the trap of just looking at the charts and doing research, and suddenly 3, 4, 5 hours can spin past, and that's unhealthy if you're not taking regular breaks. So the way that I have my day is most of the time in the mornings I'll get up, exercise, go for a walk, go to the gym, get some fresh air essentially. Again, also bear in mind I'm in the UK, so I'm also trading the US market, so it's just easy for me to do that in the morning. Again, my official work day starts early afternoon, which would be the US morning. I'm checking things for the first 30, 60 or potentially 90 minutes, depending on how active or inactive I want to be. And if I'm mobile and still want to trade, or if I'm doing something and still want to trade, I've got my default strategies that I can just check in on my mobile phone, check in, check for trade and check out, and then pretty much forget about it till the end of the day or the end of the week, depending on, again, what I'm doing. The point is, I'm taking regular breaks. I'm not sat in front of the computer watching with P&L, having that blood pressure roller coaster going up and down as, making $1, losing $1, making $1, losing $1. It's a horrible, horrible thing to do to yourself. So don't do it. But have things to do so that you're not watching the charting, and there's really nothing to do. When the trade goes on and you're waiting for your exit criteria to be met, you can set an alert for these things most of the time, or automate it, which is what I do. And between certainly from the day trade point of view, to me putting the trade on and the end of the day, there's nothing for me to do. So looking at the charts is a pointless exercise. So fill your time with productive things, and again, the unproductive things are just sitting there watching the charts. It's not necessary, again, not healthy. And if you have to look at these things, have a little research project. Have just something that you can be doing alongside and be productive while you're waiting for the trade to unfold. Outside of trading, have hobbies, have interests, have that balance in your life where you're doing other things rather than just, again, sat here doing nothing. Doing mental masturbation is something that I used to call it. It's not productive at all. Just look at the charts and flicking through thousands of charts. Again, we've all done it. I've done it, but it's a useless exercise. We want to check in, check for trade, check out. And that is the process that I'm doing. Again, right now I'm recording this podcast. Again, the charts are minimized in the background, mostly at the desk, but as soon as I finish recording, I am heading out. Some non-conventional methods for managing the trader, again, is meditation and mindfulness. I mention this quite a lot at the moment, but it is something that has had a long-term positive impact on not just my life, but also trading. It will help reduce stress in life, and obviously trading is a stressful career choice in the first place, and if you're having a bad run, those stress levels can go up. And again, if it is it me, is it the markets, is it the strategy? If you're still trying to answer those questions for yourself as you get more familiar with your the right process for you. Meditation in between everything can help reduce the stress levels and help with your management abilities. Again, other things that you can do outside of trading: engage in non-market related learning, find a pursuit. Again, I like to go hiking, walking, generally being out in nature and being involved. I also do some charity work, but find pursuits and interests or studies unrelated to trading. Again, other things that I like to do when I'm in the house if the weather's not great or I'm just not feeling like going out is I do a lot of science fiction and fantasy reading. I do a heck of a lot of reading. I can get burned through a book very, very quickly in 3, 4, 5 days, depending on how long that book is, obviously. But some of these small books And they're very quick to read through. So I tend to go through a lot of, again, science fiction, science fantasy, space operas, swords, dragons, myths, mystery. It's escapism for me. And again, because it's completely not reality, it just allows me to switch the brain off and just engage in quite literally a fantasy world. And that I find very, very beneficial. So, find your thing is all I'm trying to get to. Physical exercise, again, it's good as we crest a hill in life. I'm hopefully approaching my 50s now, but certainly physical exercise is important, again, for longevity. But use physical activity as a tool for stress relief. It's well documented to help with this and have a mental reset. Again, you don't have to hit the treadmill hard and go running. I hate running, but a nice brisk walk can be just as effective. So managing the trader, it's more than just a strategy to follow. We want to be able to be here trading today, tomorrow, next week, next month, next year, 5 years, 10 years, 15, 30 years down the line. And again, all the things that we've been talking about are things to do for the longevity of a trade, not just in this episode, but the last several episodes kind of revolve around managing the trader. The strategy, the skill set of trading is, as far as I'm concerned, it's a learned skill. It's very easy to learn the basics, and you don't need to go beyond the basics. And when you've got those, again, the hard part is actually doing it. Again, just like any performance at high level, whether it's sports or management, the C-suite, again, the skill level of what you're doing is simple. Everyone can learn it and has got the ability to learn it, but being able to apply it day in, day out at a consistently high maintained level is the thing that's going to separate you from everyone else. So managing the trader inside is probably one of the most, and again, I know I've said this several times, but this is probably the most important thing that you can do for the longevity of your trading career. Again, anyone can be short-term lucky. Anyone can have a very quick win streak early on. Again, I certainly had a very early win streak. Again, that was probably my downfall. I probably would have learned a lot of things a lot sooner if I hadn't have had that win streak. But I realized that I'd had it very early on at the same time by comparison to a lot of traders, and I was able to make course corrections. So manage the trader. It does involve recognizing when to step back, make course corrections. It could be due to personal mindset or challenges or unfavorable market conditions. Again, the three basic questions again: is it me, is it the markets, or is it the strategy? And this is just a simple and practical practice for maintaining that long-term trade efficiency, as well as your personal well-being. So incorporate all of these things together, both the conventional and the non-conventional methods, like meditation, physical exercise. Traders can ensure that you remain sharp, focused, and ready to capitalize on the opportunities when they arise. So with that said, if you like what you heard today, be sure to follow us through the very first episode where I map out the first of several of my most profitable money-making strategies. If you'd like to learn more about my training and mentorships, you can head over to antivestor.com, or you can shoot me an email to phil@antivestor.com, and let's start the conversation. I've always got a lot of time for serious traders, and what I do is not right for everyone, but I'll always point you off in the right direction for what you're looking for based on our conversation. So that's all for today. Thank you for giving me your time and your attention and making me a part of your regular routine. Have a wonderful day, and I'll speak to you at the same time next time. Toodaloo trader, bye for now. Keep in mind that futures, options on futures, stocks and stock option trading involve a degree of risk that may not be suitable for all investors. There is a risk of loss in every investment that you make, and it's your responsibility to assess the risks of your decisions. Past performance is no guarantee of future performance, and Antivestor provides educational information and does not provide financial advice.